Welcome, everyone, to Tuesday the 13th. It's not Friday the 13th in October, but Tuesday. This is the midweek strategy session call. My name is Steve Vetterl. Let's get fired up. Let's double check that you guys can see my risk disclosure screen. If you can hear me okay, please just drop in a 666, the devil's number, right? Since it is Halloween, I guess we can play some pranks and have some fun, right? Okay, let's read the risk disclosure. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk and can lead to complete loss of funds. And I've seen it happen, so be careful. So before deciding to trade the foreign exchange market or use any of our software alert products, you should carefully consider and diligently consider your personal investment objectives, level of experience, and risk tolerance, whether or not you can afford to lose money. Correct. If you are sharing results from any of the software, I know we got a bunch of stuff coming out. I got some updates on some of that as well. Please do not use the company recommended settings. We are not a financial advisory firm. That would be myself and my own firm. We do not license software the users can use however they want at their own risk. We do not have anything to do with customers' brokerage accounts. We don't trade for you. We don't direct you to the brokers. We don't do any of that but licensing really good software and selling excellent education, especially all of our onboarding stuff that is being finished. Actually, in the final stages, I've been lucky enough to see some of the pre, and it is outstanding. So I got a few things to clean up. Just keep in mind that my settings are not company recommended settings. So always stay away from that in conversation. Stay away from things like set it and forget it. Stay away from anything that would allow someone at any of our regulatory agencies to build a resume. So with that being said, let's swing over to Forex Factory calendar. Not too much going on this week. We have some holidays, which was yesterday. It's actually here in the U.S., Columbus Day. Let me share that screen. Here we go. Not a lot going on. If you trade the Aussie dollar, it could be certainly a little more volatile. Keep in mind the specific time that you guys are actually, you know what? Looks like it switched again. All right, so we're on East Coast time here as far as these news stories and all that. I would just say that if you're doing a lot of taking trades with any type of pair related to the Australian dollar, do keep in mind tomorrow could be a little bit more treacherous. These are East Coast times. So for a couple of questions that I got, I usually put the notes out on Saturday for the Sunday trading session along with our team that produces the video, which is nothing more than a recording of my class. There's usually pretty good stuff inside there. I think a lot of people have gotten away from reading that because a lot of the notes look the same on the last part of it. But I do update this to whether or not I'm trading or not, or whether or not the developers are trading or not. Keep in mind that all developers have committed, at least in the beginning, to doing weekly coaching calls for our 5 pieces of software that'll be out. So in a perfect world, all of the developers will be explaining, are they running this week? Are they not? I think most of them will be running most of the time, but I still think it's important to keep an eye on that. I will post on my Telegram channel if there's any exogenistic events going on that, could just explode currencies in one way or another. Do keep in mind, and actually let me log on here to the systems. Any questions on anything that goes on at Forex Factory? I do get questions a lot on how you filter. I just take out these events. I only really care about red filter events. These are like high impact news events. That's what's most important. Yes, thank you very much. I appreciate that. Looks like you got a chance to listen to my podcast. So I was on the Casey Stubbs podcast last week. If you guys don't know who he is, he runs a pretty successful podcast called Trade It to Win. Guy's kind of like the Joe Rogan of trading educators. So we brought them on. The interesting thing, you guys got to love this. The interesting thing about this, I talked about my background, and, we don't want to rehash my background, right? But, he wanted me to get into detail about the background. And so I went through it and all that. And he's like, well, what are you up to these days? And I said, well, I'm helping along with some other coaches captain, a large ship of subscribers that's probably going to get much, much larger. And he's like, well, what are you doing? And, I didn't really want to get too much into the AP stuff, but I kind of showed a few things. And, once we got off camera, we stopped shooting live. He'll have everything up and produced, I think, in a couple of weeks, by the way. I guess they get moved to the front of the line, which is cool. But the funny thing is I went and showed him a couple of MyFX books and, went through the disclaimers and normal stuff I do as far as presenting this to a seasoned trader. This guy would not shut up about variable. I mean, like he's like, I want to be in your downline. I want to be, part of the team. I can help you market. And it was funny because I totally wasn't, hadn't really anything to do with it, right? So, let this be a lesson to people that you approach, and I typically do it in a fairly nonchalant manner because, as you guys know, I'm not a marketer. I'm not any type of affiliate. This is my first rodeo in this arena, right? So I'm green. I don't know this stuff, right? I just tell it like it is to, somebody that would be a trader as a friend. And so far, everybody I've shown it to, taking that type of approach has been like, I'm in. So that's the story. In any case, as I digress, let's get back into currencies, talk about what's going on. The chat window is open. Do not post questions there. Please post questions in the Q&A window. All right, so let's make sure I'm sharing the right screen. There we go. Right. S&P 500 is those that follow, or 401ks, equities, international investing folk. You may have stocks as well. It's always important to pay attention to whatever your country's S&P 500 is, if that's what you're invested. Bounced off a main line of support off of a cup with handle breakout, came right back down. It was support. Now we're back up again. Back up in nosebleed section. For those of you that have equity exposure that can't handle a lot of risk, but yet has enjoyed a raging ramp up in U.S. stocks, along with most European equities as well, you may want to take some off the table as we're doing the client accounts right now. So it has nothing to do with currencies, just some free financial planning advice for you right now. We will more than likely see a correction depending upon when the second stimulus bill, if these knuckleheads in DC ever to get it together, can make it happen. So let's take a look at the dollar. I guess I should probably have a resistance line in here. Those of you who are new to the game, these are a technical analysis chart. Each candle represents a day of the US dollar, DXY. This is a system called tradingview.com. It is fantastic. It is very affordable. I have no affiliation. So we bounced essentially from a big sell-off, which created some havoc in a lot of Forex traders, both institutional here. And then we've been settling into a very tight range, peaked our head above, sold off from that point. Essentially, dollar just pulled back. I'm expecting the dollar to go into the mid 80s once we break from however long this consolidation takes, which very well could be take a look at which may very well could be over the next month, waiting until elections to take place in this country. I know that markets are sort of on pause, even though the equity market's been racing back up to the highs again. I think that's been just nothing more than too many people getting short in institutional land. Usually when that happens, the institutional like to barbecue the shorts, and that's what you're seeing in equities right now. Not much going on in currencies. Not much risk. I thought there was a lot more risk potential last week and the week before. I know that I had made suggestions to turn off the systems those last 2 weeks, possibly 3 weeks, depending on how your account's looking. For those that are up a bunch, and I'll be showing some of the MyFX book accounts as well when I'm finished with the quick analysis here. All right, so there's the dollar stuck in the melees, bouncing around a tight range. Let's take a look at Euro USD. Again, same thing. If I could extend these lines, we're still bouncing around in a tight range. Okay, so what does all this mean? So the only real takeaway I want everybody to get from this is very simply one, add a little bit of education from a candlestick chart technical analysis perspective to your acumen each week. That's my primary goal. Secondly, is to just be able to quickly look and see what's going on. If we're stuck inside this particular range, there's a much higher chance that a martingale strategy, which essentially is an Einstein and an Alexander, and for that matter, variable is a martingale strategy as well. But variable is done much better because those multi-sequences of trades that come on are much smaller in size. Okay, so it is a much more conservative version that you can actually compare to the ultra conservative settings that some of my guests have come on and shown. So throughout the course of the last 12 months, for those of you who have not seen the MyFX books on variable, you can please comment on that in the chat window if you want me to show you the MyFX books on variable. We've got a number of them now. I also have a couple of live accounts. We're in the process, obviously, as you guys may know, is getting this stuff all live in the next week, along with 4 other pieces of software. So, so if we were to break a period of consolidation like this and start to move down in this area, start to break out above it, more likely up, because the DXY more likely will go down if my analysis is correct. I personally, if I was trading Alexander, I'd be less willing to take long trades as we're ripping down. I'd be much less willing to take short trades if we're tearing up, right? Because then essentially while you're moving out into this, you can see this couplet handle pattern right here. We broke out from it right at this point, and we had what was called one time framing up into the next area. Essentially, that's where each of these candles has a higher high and a higher low until some point. When you see that type of trending in a daily chart, or even as low as 240-minute chart, which is a smaller time frame snapshot, I typically will not step in front of what I call the freight train, right? So in this particular case, I'd be taking longs only while we're tearing up until I saw that one time framing, which was what, 1, 2, 3, 4, 5, 6, 7 candles. Essentially 7 days have one time framing took place up into another range that we started bouncing around inside. And, as I often say to subscribers, just, let your heart not be troubled if you're not understanding what I'm talking about. It will come to you in time, I promise, especially if you listen to enough of me droning on in these calls, right? So one time framing is important to recognize. You can see where we're one time framing here. It was what, 1, 2, 3, 4, 5. And then we came up to a resistance area, arguably, and this came back down light basing, and then we broke. So this is a textbook pattern that I want everybody to begin to recognize. It's what's called a coupled handle. It's a very powerful pattern. This has shown itself, thousands of times in all the tech stocks that have raced up globally the last couple of decades, over periods of time. It's one of the most powerful strategies out there in technical analysis, called a couplet handle, especially in the breakout, where we break out above the handle. This is actually the buy point. A lot of people are like, well, why wouldn't you buy down here? Well, if you're down here, you don't know you're going here, right? And if you're down here and you're just have a lot of dojis, which essentially is indecision candles, right? It typically means that you're going to push up and out. So, one of the most beautiful couplet handle patterns that I took advantage of was Amazon way back in 2003. Broke out with a couplet handle and, had a meteoric rise, and most of you probably seen up into this day, essentially 17 years later, the stock's still running like a monster. So begin to recognize the patterns. It'll come to you more over time. But I think it's powerful from the standpoint of an Alexander subscriber, or for that matter, an Irish subscriber. And, a lot of the guys at Hawkeye Trading talk a lot about this in their morning. They talk about how, patterns form and you break from those into another one. So there's a little bit of analysis on that. So let's take that thought process and let's move into the GBP USD. And, not as great of any kind of teaching example with the pound over the last almost approximately 9 months. Obviously this is the pandemic related move and then back up. You can see where it's had support and resistance points, which is the black line. Once we broke below it, came back up against, and no surprise that it sold off back down to the 200 moving average line, which is the green line. So again, as a trader accepting trades, this is mostly for our US folks, you guys have the ability inside Alexander to, essentially not take trades, right, or not accept a particular sequence of trades that may show up on either your phone or desktop. And understanding these patterns going forward. The problem is most of the questions I get are like, well, what do you think is going to happen going forward? Now, it's not me coming out and forecasting, because it's one of the most difficult things to do in this industry. And oftentimes I will be wrong. Essentially, I try to show you guys how to read it yourself, because then you can start to read it real time. And support and resistance candlestick analysis, along with volume, which is what's at the bottom, and our green line. I'm going to start to bring some other lines in the mix as well. Will help you guys get a little bit of better education. You really don't need to know, in my opinion, any more than that. You can just expound upon that type of education, which absolutely comes in the back office from some of our team. And as we begin to convert this to different languages and all that, it's just going to become more of a self-fulfilling prophecy, is my hope. All right. Got a couple questions in here. Let's take a quick peek first, though, at USD JPY. Again, it's just, there's like no great patterns I see going on with any of this stuff. Notice that our most hated currency right now, Euro JPY, has begun to move back down. Do know that when the other softwares come out, I'm going to expand the currency pairs. We'll take a look at some other pairs I'll add into the mix. But for now, we're just looking essentially at the main ones that are traded. We're going to have other currency pairs that are going to be some of the best to be inside of in the different pieces of software, whether it be Stratamus or Neo the Legend. It's going to be just really different things. And I tell you, I'm really, really proud of, obviously, the team that's put all the effort into getting this stuff released, the developers. But most importantly, I'm really proud from a financial planning standpoint that the corporation has taken in a complete sea change in phase 2. And they have brought in the most important concept that exists in my business, and that's diversification. So different models, for clients, obviously, to trade, equity portions of their portfolios or bonds, or certainly moving into other areas of investments, real estate, currencies, things like that. But the bottom line is that diversification is the key. So regardless of how wealthy or not you guys may become, it is my genuine hope everybody becomes super rich in this group, right? Please be diligent with your personal wealth. Don't have it all in one stock. Don't hear the stories like, my buddy Johnny had, all his money in Apple Computer and he turned into $2 million and he sold and bought a house, right? He got lucky, right? So now a lot of people say I'd rather be lucky than good. But along the way, just, use some diversification. The same thing applies to all the licenses. Now with our super flexible license model that's coming out, the licenses are cheaper. I would, at the bare minimum, unless somebody's just super difficult to get in, at a bare minimum, I would have 2 licenses, you guys. So essentially, it's almost 2 for what you got for the previous license package. So I think it's an outstanding model. Really, really smart of the board members to come out with that. I thought it was a great move. So anyway, let's go into, and I'll show you guys some of the, I always seem to get a lot of questions on gold. Actually got a wedge building in gold. You guys can see it's on a larger scale. We've been stuck in oil for months. I really don't say much about this, you guys. So let's take a look at some fun stuff. All right, so This is, let me just see one of these questions first before I go on. Which setting is for increasing the number of trades? Yeah, if Alexander only sent you 7 trades this week, you might want to double check what your settings are, Marta. But that's just because there hasn't been a ton going on. The markets really are in a holding pattern. It's kind of like airplanes circling above an airport right now. Waiting to see what happens. Will the developers of Einstein be conducting weekly coaching calls? And Sean has asked a fantastic question because I have posed it most of the time. Actually, let me just go in and share the screen again here. Okay, there we go. So Sean's question was, will the developers of, I can't even seem to get these guys to answer a question of mine in Telegram. So, I mean, I don't know what to tell you guys. One great thing that came from this weekend is I had a really good conversation with Dasan. If you guys don't know who Dasan is, he is the developer of Variable. Dasan's actually a really smart guy. I mean, get this. This guy has a robotics and engineering degree from Worcester Polytech. So if you don't know anything about Worcester Polytech, it is basically a super kid school. And I think he had a full scholarship, from what I'm not mistaken. And he went into the engineering field from, I guess, about his dad's in the same field. He's down in Florida. And he hated it. He'd rather write code and build EAs. Eventually he wants to build a hedge fund. It's great stuff to have a conversation with the guy. Super smart individual. So we were giving him some pointers on, how to conduct the weekly calls, because he's such a ridiculously high level. You're going to have to sort of bring it down to the masses, and that arguably this is one of my poor qualities that I can certainly be accused of, right? I have a tendency to, present in a much more advanced state, right? And, not everybody wants to have that level of depth. They just want the quick overview, the quick hits. Even though I understand that and I have gotten that feedback before, I still think I need to press forward with making sure you guys get educated, bottom line. So with that being said, what you are seeing on the screen, if you're seeing my screen okay, is a MyFX book for Variable Live, okay? This is a live account, LQDFX. This is one of the very good companies in London. Done really well. Look at the drawdown on this. This is actually one of the higher drawdowns. I'm actually glad this drawdown's higher because the software has just done exceptionally well. Why? One, notice it's on some different pairs. Okay. Actually, here, let me go to the summary. See what the software is trading? It's only trading 2 pairs, you guys, for a essentially $3,900, $3,800 account. Okay, so the account was funded with just a bit under 4 Gs. It's gone up about 60%. The guys that own this account have taken $1,500 out in profit, which is great, right? And this was started August 1st. Okay, so I just want you guys to see the consistency in the equity growth. This is not much different. Now, there are different tweaks according to how Dasan explained this from the other software, but this just doesn't take big trades. So in sequence level 5, 6, 7, some of those deeper ones where Alexander and Einstein are just putting on some big lot, sort of swinging for the fence type trades, expecting that rubber band to snap back, right? The mean revertingness of markets, which just is sophisticated ways of saying if the markets get all whacked out in price, it's typically going to mean revert, meaning come back to the center of wherever the chart is. It's a very, that's probably not the best way to explain it, but you guys are hearing me talk about rubber bands a lot, right? This happens a lot in the pricing of all different types of assets. I don't care if it's real estate, art, classic cars, any of this stuff can get completely stretched in pricing. What's called a reversion, I should say, a swing or a extended move away from the average price. Most assets are going to want to mean revert, meaning come back to those prices. And that's what the martingale and many other types of systems are betting on, that if it takes enough trades way out in a very stretched price move, whether it's euro, US dollar, some other currency, it's going to want to snap back. The problem has been, obviously, we have just huge moves in some of these currencies. GBP, NZD obviously has been just a rager in that department. So it's much more difficult, even with the best expert advisors, to stick something on a currency like that unless you're really monitoring what's going on as a manual trader. So, but the bottom line with me is, allow different currency pairs to trade. You guys can see, again, as has been the case with almost everything we've shown that has at least had the US dollar as part of its currency ring, this is where all the profits come from in most cases, okay? Almost a 2 to 1. Same thing with trades, win rates, this is actually done really well. These win rates are actually a little bit higher than some of the longer term win rates on the last FX book I'll show you, which is actually Dasan's own demo account that's been running for a year. Now, where is that account, by the way? Let's look it up. So here we go. So here is the MyFX book, again, for Dasan's demo account. Now you guys can see that the last time this thing updated, highlight this, was September 27th, okay? Why is that the case? Because in this particular case, the broker that he deals with, which is KOT4X, I don't really know these guys as well, they only let you run a demo account for a year. So it actually stopped trading because of it. And he figured, hey, it's enough of a track record there. It's been double verified. Let's just leave it. The other interesting thing about this is, I hope a lot of people are talking about, because I think this is important, because this falls absolutely in the category of what my role is as a risk manager, is that this account never changed the lot size. Still 0.01. And that is of note. Okay, so make sure when you guys are talking to all of your teams about this, there's a pretty big disclaimer that goes with showing this. Okay, and I hope you guys have it. If not, just ping me and I can post the disclaimer in my Telegram channel, which should be with anything like this that is shown. It's a disclaimer, it's slightly different than what I speak about in the front, but it's covering essentially the same type. But the interesting thing about this is, we can actually show this because it's fully verified. And I think this is what it's impressed a lot of my bigger colleagues that I've talked to about Auvoria. They know about my FX book. They know about FX Blue. They know that, they're autonomous organizations that have nothing to do with brokerage accounts. That is almost like an auditing type of firm that, would go in and audit like a hedge fund trades, right? Essentially, these guys do that with a lot more statistical analysis and quantitative analysis in that. So always want to be looking at deposits when they were put in, what did they grow to, what was the drawdown. Now notice over this period of time, the drawdown was about what the drawdown has been on our live account for the last 2 months. See that? So you're right in the 18% area through the worst pandemic and Brexit craziness that we've seen in a decade. This thing's drawdown's been 18%. This is the kind of numbers, by the way, that would qualify you as a, hedge fund guy, trader, whatever, somebody runs family offices, to actually go into a large organization from an institutional money manager perspective and sit down in front of a sovereign wealth fund, right? Sit down in front of a Scripps family private office, which runs billions of dollars for the family, right? Or something like a University of Texas endowment fund, right? So as I always try to get you guys to think, as I'm constantly thinking as an institutional investor, it's all about risk management. So the key is low drawdown, and this perfectly dovetails in with the discussion of risk, 0.01 lot size. Now, even Dasan told me on Sunday, arguably I should have probably put it up to 0.02. And you guys can do that if the account was large enough, obviously, for your own wealth. But he said, hey, I just want to see what this thing does for a year with 0.01. All right. Let's see. Other questions? Yes, you're welcome. Thank you. Very nice of you to say. We're working hard for the troops here. So this is live. This is Dastan's account. Do keep in mind this thing caught a raging trade during the pandemic, which is beautiful. Do keep in mind that the returns were higher last year because it was relative to account size. Okay. So even if you took out, and I'll tell you for what it's worth, a lot of the really smart directors and a lot of our team leaders out there, they actually take out this in discussion, which I would encourage you to do. So let's take out the 231%, right? And the associating compounding that came from that. And let's cut this in half. Is that a good return over the last 12 months? Fantastic in institutional land. Leave it at that. Questions? Because I'm about to wrap it up. Anything? No, I don't know how well these software is going to do in the future, right? Past performance is no indication of the future, but it's all we have to go on. Do understand that diversification is going to be absolutely critical. I would hope that, if I had a microphone on the wall and maybe I should say to you guys, anytime you guys present, just pretend Steve's got a microphone on the wall somewhere. And, are we saying the right stuff? We put in the disclaimers out there, obviously, but are we talking about this in a contextual manner that brings people back down to earth? Because I'm always afraid to show these kind of numbers. That's why I prefer to show the ones running on a smaller, or some of our, actually, here's the other one. Is it? Here we go. So this account's been running since May 18th, a little bit shorter term. Notice the drawdown's been less. Okay. Again, 0.01 hasn't been changed. Now the leverage is a little bit different here. This is a 1 to 200. Okay. So do understand that. Do understand that the win rates, again, right in the same area. And by the way, I'll be going through all this with Neo and Stratamus as well as Gearbox going forward. So I'll be going through all that stuff. But yeah, I don't need to get in as much into the detail. My job is really just to kind of educate you guys that you definitely want to hook a MyFX book up to your accounts. I don't care if it's demo and or live, or whether you're switching between the two, which you can do. You need this as your analysis. This is all risk management right here. It's understanding what it's doing, drawdowns, gains, all that fun stuff. So if you guys haven't done this, there are a whole bunch of videos out on YouTube that show how to hook this up. Yes, it is a bit of a task, but you're going to love it when it's done, because it's going to give so much validity to your story if you're telling one as an affiliate. So these are the monthly returns. Hasn't been as great recently. A lot of that has to do with just less opportunities. Market's sort of in a holding pattern, as I like to say. Just think of all those currencies as jets circling above an airport, waiting to get signals to land or to run out of gas and explode. So what else do I want to say? Always check the summary, see what currency pairs or trades, right? Notice USD JPY. But what are you noticing from this? Hasn't really taken a lot of trades, No longs, some shorts, so a total of 14, right? Had an okay win rate, just not the kind of opportunity offered to where the mothership here brings the opportunity in. That's quite insightful. Also, this is diversified from a risk management standpoint. Do keep in mind that if you guys want to continue the diversification discussion into, 2 licenses, 3, 4, 4 essentially covering a complete diversification, in my opinion, and that's going to cost you, unless you've got a whole team under you, it's going to cost you $400 a month, which still would be totally worth it, in my opinion. So we're going to be, what I assume, we're going to be one of the few organizations on this planet in affiliate land to have just an inordinate amount of subscribers that I think should become affiliates, right? Like myself. But that's okay if they don't want to build. they could just let the software trade their accounts. I mean, that's a great thing. I don't know that I've ever heard of that, honestly. So maybe it exists in other companies out there, but I'm too ignorant on the subject. Anyway, that is now Gearbox. I do not have authority to show any of that yet. Okay, so there's still the problem with a lot of this stuff is that I only personally think that we should be comparing softwares with softwares that are somewhat similar. Okay, Gearbox is also a martingale strategy, so you'll be able to do that. But Gearbox's new versions are completing this week. So a lot of the track record has been fantastic, especially since I've been privy to Gearbox running on what's called the Bananas account. So we'll show that to you guys eventually. That'll certainly make you fall off your chairs. But there's more risk associated with that, and you have to pay a lot more attention to that. So it is my hope that Tyler, since it's his baby, Tyler is going to essentially T-Mac's going to lead you guys along each month or each week in a developer. That is definitely one where you're going to need to tune in to what Tyler says each week, especially in my opinion, for the first couple of months, because there's a lot of different things to know about Gearbox that essentially allows you to switch gears from an Alexander and an Einstein type of standpoint. Same concept of martingale, but with a lot more adjustments in risk. Okay, meaning that it can be a lot less risk if it's set up correctly, right? So I'm not going to ever come out as the Gearbox expert because of that fact. I'm going to let T-Mac lead you guys on that one because it is his baby. Eventually, I'll understand everything, and then I can bring in some of my twists. I'm not going to suggest settings that Tyler hasn't, nor will I be bringing anybody on calls for the settings. That is going to be completely up to Tyler to lead you guys on. So I know it's a long, drawn-out answer to the question, but I'm actually going to punt the risk management to him when it comes to Gearbox because he knows it. So maybe it's 6 months, I'll be just as much of an expert he is on the different components, and I'll be able to help guide you guys, at least from the federal perspective, which is often wrong. So I think it's important to, be diligent. All right, so that's the deal. 10:41, around about 41 minutes here. So if you guys got any questions on anything else, you could certainly send me an email. If you've never sent me an email, it's sfederal at, I gotta spell it right? AuvoriaPrime.com. Did I get that right? AuvoriaPrime.com. Cool. It's in the chat window. If you got any questions on anything, do know that if I were you guys, this is one of the single best stories that probably many of you have ever had in your whole life as far as a side or a full-time business. Take advantage of it. With that being said, my name is Steve Vetterl, hosting the Tuesday and Saturday 10 a.m. Pacific time calls. Welcome to all subscribers. Everybody have a great week. Stay safe. Let your heart not be troubled about all the crazy political events going on. They too will pass. May the trades be with you.